Good morning, good morning, good morning. Hello, everyone. I'm just going to be going over the euro dollar trade. I was originally shorting this, and I was shorting it from here, but it gave me a uptrend signal. I think I had right here uptrend anchor break right here. So when that passed this level here, that's when it actually closed above that. So that's when I was thinking, oh, they might continue up. But as you can see, I turned my short trade into a long trade and then it went down like I originally expected. But I'm still thinking they may push up slightly to here because I'm seeing an area of supply. And this area of supply right here is probably what they're after, not this guy down here. Because this does look like an uptrend formation. And when I look at this, this is not the cleanest level that they left here, but we're going to find out what they're doing. But all in all, I'm anticipating that they're going to go up from here a little more, probably pass up where I was going to short from. I should have kept this position. I would have at least made money down to here. That would have been at least 50 pips. But I missed out on that because I thought they were going to keep going. Just got another alert on the 10-second chart. Let's see what's going on there. Matter of fact, I'll just go out of this. There we go. So just got an alert on the 10-second chart. These are not any indicators that you know of. I created these. And so these are mine here. What you're looking at. Just the top two. These two here. These two are typical. But anyway, I just got an alert that the 10-second chart is coming down, and even if it does, that won't matter because everything else looks like it's starting to turn. So the turn is look like it's trying to happen. So what I'm looking at is this: a 10-second chart. I do believe I can see there's a little blue. Let me get rid of some of this stuff here. There we go. This little blue candle right here. I'm thinking they're probably going to come to that area, and then maybe we'll get a turn towards the upside off of the 10-second chart. They just left another supply area. Oh, but they might hit this and then come down to this blue line and then go back up. Let's see what happens. Also, we look like the 1 minute is starting to curve and turn. As you can see, we're starting to have some higher lows right here. What we would need to verify that this thing has actually turned is we're going to need price action to break the last pivot high. So that'll be this guy here. Let me go ahead and grab my handy dandy uptrend breakout lines. All right, where are you? Why can't I find you? Because you're way up there, that's why. There we go. Bring it on down. Boom. All right, so this pivot low here is connected to this pivot high. So what I'm going to do is I'm going to put my uptrend breakout line here. As you guys can see, I already have it pre-programmed with an alert. That alert pops up over here. You can see I have many of them. Let me go ahead and erase these here. That's the alerts log, but these are the actual alerts that I created. So here's my the one that's highlighted already. That's this line here. So that's on the 1 minute chart. So now that I found that there, I'm going to go back. And if you guys notice, I just moved that line because I have this alert already preset. Notice it says 3 minutes inside of here because I had done that on a 3 minute chart previously. But now I just did that on a 1 minute chart. So because I did that, I want you guys to notice over here, this says 1 minute. Notice how this says 10 seconds, that says 30 seconds, that says 1 minute, that says 1 day. So this thing changed to 1 minute because I made the adjustment on the 1 minute chart. I'm bringing that up because I'm going to convert this back to a 3 minute. Start here. Let's put this back to a 3 minute. And now you can see what it looks like on the 3 minute chart. So now I'm going to adjust this line so that it fits on top of this 3 minute candle. And then you're going to see this 1 minute right here inside of the alerts tab or column, whatever you want to call it, section, which is right here. And so that 1 minute should change to the 3 minute because I'm making the adjustment on the 3 minute. So let's go ahead and do that. You guys keep your eye on this while I move it on top of this candle, or remove it and then move it back. That movement makes the adjustment. So let me go ahead and push that there. And when I let it go, you guys will see that that'll turn to 3 minutes. There we go. Just let it go. Turns to 3 minutes. The reason why I'm doing that is because the 1 minute chart, if price action closes above, if I go back to the 1 minute, if price action closes above this on the 1 minute, it's going to give me an alert sooner than if it's on the 3 minute. And so I just want to be sure that they're actually going up. And so I'd rather do it on a 3 minute chart as my lowest time frame than on the 1 minute, because you'll get too many boxes closing above that price. So I just want to ensure that at least 3 candles from the 1 minute chart make it past this line, not just one. If I have 3, then that's pretty good odds. Not just 1, but 3 of them. So we'll wait and see what happens there. I just got another alert. What was that? It was the 10-second chart again. So what do we got going on the 10-second chart? Let's go back here. 3 minute. Reset. Reset. All right. Turn all of my indicators back on. Okay, so the 10-second chart just went up. 30-second is up. 1 minute is up. If the 1 minute, let me see. I just want to make sure before I take that risk. Did they come down already? Oh, wait. On the 10-second chart. Oh, no, they didn't. Here we go. We were waiting on them to come down. Okay, so then I'm not going to make a move then until they come down. If they hit this blue line, then start going up, I'll take it. Because I think they need to come. Let me see. Ah, here it is on the 1 minute chart. It's actually lower. It's this little guy. Not that much lower, but 109.10. So I like this candle here. This is a hammer. And so that hammer should act as a catalyst for the uptrend continuation. The reason for that is you can see there's mostly wick here, and there's a little bit of red. So sellers tried to take over, but they lost that fight there. The bulls came in, and they weren't able to turn it green, but the bulls were able to have more wick here and cause the push. And as you can see, that push continued. Sellers tried to come in again, but the buyers are still pushing forward. So we'll see what happens. But it is very well possible that before they cross over this pivot high, that they're going to come back down to here, or they're going to go up here and then come back down and then go up. So we'll gauge it as we watch it. But right now, I don't want to make any moves. What I will do is this. I'll put, let me see. What can I do here? I'll put an alert on here so that if it goes off. All right, so we'll do, oh, that's not, we'll do an alert. And we'll say anytime that it crosses down the horizontal ray, just once, then we're going to consider the uptrend. So we're going to say Demand zone. That's what we'll put. We'll put demand zone at. I don't have to put price. So we'll put demand zone on the 1 minute chart. And then we'll put here place buy limit order at let's do a buy stop order actually. So what if that thing goes off, we'll do a buy stop order at 1091 5. We'll do that. Or we'll just do a market order. It just depends. So right now I'm looking at a buy stop order. Then is that all I need? Yes. All right. And then we're going to go ahead and create that. And then let's see if that popped up in here. Yep. There it is. Demand zone on the 3 minute chart. So we're just going to wait for that to come down. And actually, I need to change that. See how it says 3 minute? And I'm trying to do it off the 1 minute. So glad I showed you guys that earlier, because now I'm going to go ahead and move it again. And when I let this go, that 3 minute over there to the right should turn to a 1 minute. Bam, we're good. All right, so this thing's moving. There's still the uptrend momentum. It already broke this anchor here. I really don't consider this an anchor, but we'll just call it that for just the sake of a breakout. But this right here is what I believe they're going to most likely come back to before continuing the uptrend. So let me turn back on my smooth Heikin-Ashi. Yeah, they're going to come back down. I don't like the way it's turning. Also, we're going to have... Oh, it's probably going to be this guy here. No, it's not going to hold. But there should be... Oh, there's not much. Oh, yes, there is. Is it? No, that's not a great area. Let me see here. So this candle right here tells me we're going to get a little pullback. So I'll mark that here. Do I have pullback in here? I don't. All right, so let's go ahead and create one. We'll call this a downtrend pullback. I'm going to do this one on the 1 minute as well. Keep an eye on price in case we walk away or something. Get an alert on our phones. Middle center. If you guys have any questions, let me know. I'm open to answering anything. I'm just reviewing my chart. But my name is Professor Ward, and I've been trading for a very long time. And right now I'm just looking at Eurodollar once again to see what I can do to recover from this here. So right now I'm anticipating a possible pullback. This is all garbage to me. When I see price action acting like this, this is just noise. There's no support, no resistance, no supply, no demand. There's nothing in here. They're just trickling up and just playing games. So this is a the beginning of proof that they're most likely going to come down to this here. Let me put here, we're going to do a buy limit order at 1.09. Let me see here. Well, that already says. We'll just leave that there for now. I'm not going to jump in at this price. I'm just putting this here for now. But I'm thinking it's going to come back down to here, this area. This buy limit order. Let me go ahead and put a... actually, I don't have to do that. Let's see here. 1 second. All right, so I'm going to put a hourglass here, just letting us know that we're waiting for this to come down to this area. It's not an area that has already been triggered, but we're waiting for it to get triggered. We're also waiting for this anchor break here for the uptrend. We're also waiting for this downtrend pullback here. We're just kind of gauging price action, like how is it going to move as it's moving in our direction. So here's my direction as far as what I'm going to be trying to accomplish here. Looks like we got a question from Parnham W94. Give me 1 second. What do we got going on here? Identifier style. Give me 1 second, guys. This is my indicator and something's not working on here. Why is it not identifying this area here? Am I on the 12 hour? Yeah. That's strange. Let me do this. Let me save. Oh, it's already saved. Well, let me reload. Sorry, guys. Give me 1 second. All right. Okay, so if I do the 4 quadrants here and we look at different time frames, the 3 minute we still see uptrend. 1 minute is kind of struggling here, but it should make it at least up to here and then come down here possibly. But the 10 second shows it could be turning. We'll see. Yeah, if this thing turns officially, like not officially, but if it just turns from here, I think that's when we're going to get this. But let me get back to my big picture, and then I'll answer your question, Parnham. Oh, now it's working. See how this is highlighting the candle? That's what I was trying to get it to do back here. But I was trying to get it on the 12 hour because I want to show you guys something. This candle here, this is what I think they're after. There it is. Now it's highlighting. There we go. You got the little star right here, star over here. And you guys can see I already put the word supply signal on here. I programmed this so that it gives me these types of indicators to let me know if they've hit supply or demand. It calculates based on the coordinates that I plugged in. And if all of those work out, it'll give me a signal. And so these are the signals that it's putting up. And so I'm just labeling, letting you guys know what that's for. That's a supply signal, meaning I should be expecting a downtrend, which is the reason why I originally was shorting this. As you guys can see, I have a sell stop order here. And then I have a sell limit order up here inside of this supply area. So I already started shorting this originally, but then I saw it spike above spike above this, and because of the spike 3 times and it just kind of hung out up there. This is a 12-hour chart, so this is basically a day and a half of them hanging out up here. So you can imagine my psychological anguish of trying to figure out, like, what are y'all doing? Are you going to drop and respect this, or are you going to go up? So I just put 2 here because I didn't know which way it was going to go. But then I ended up deciding that it was going to go higher. So I turned my trade around, and that's why you guys see on this chart here, you see that I'm already in the trade. So if I go to 12-hour, you can see on this one, the first one, which is on this tab here, this is just me charting and then putting where I'm going and all of that stuff. So this is my TPs and all that stuff on the short. But on this other tab, this is me actually in the trade. So you can see here, I'm long, but that's because over the day and a half, psychologically, I thought, okay, they're probably going to go up. So let me change it to a long, make the little 50 pips up here, and then we'll short it. But it did what I originally thought, which was it shorted. So now I'm trying to figure out, is it going to turn around again, which is why I have all these little things here on the lower time frame. That's what I'm trying to gauge to see if it's going to go back up here. I can get this money back. And then once it gets up here, we're going to see if it's going to keep going. And if it does, that means we're going to be correct about that second level at the top. And then we need to short from there. To be safe, if anybody wants to get in this trade, the safest bet would be to put a sell limit order up here at about 110.05 or 110. Either one you guys want to do. Do not put a trade in greater than 2% of your net asset value. So if you have $1,000 in your account and you're trading Forex, you should not be trading with more than 1,000 unit position. If you have $10,000 in your account, you should not be trading Forex without more than 10,000 unit position. What that do is that's going to keep you safe. It's going to keep you in a small position so that you're not losing all your money out of your account. You're not trading heavy or big. And then you can hold on to these trades as they play games like this. This is a day and a half of them just going back and forth on the smaller time frame, back and forth. So if I were to, you see these 2 white lines? I'm going to go on a smaller time frame so we can look in between these 2 lines. And let me go back down to that. Let's try the 3-minute. Oh, that's too big. I mean, too small. Let's try 12-minute. There we go. 12-minute looks good. So we were on the 12-hour. This is what it looks like on the 12-minute chart. This is what I was dealing with for a day and a half of, are you going to break out and go up, or are you going to break out and go down? So you can imagine how mentally frustrated I was with this thing. So when the news came out, this is what we had this morning. Getting over to Parnham's question, why did we crash after a lower ISM non-manufacturing PMI figure? Do you look at fundamentals as well for my technical analysis? Not really. If I'm not mistaken, he's well versed in every facet of trading. He is next level. I appreciate that, Polarche. So what I'm looking at right now is I don't, for the most part, look at fundamentals. I'm going to tell you why. I've been in this business for 25 years, something like that. I was trading before you could trade online, when you actually had to trade with a broker and go stand in line and all that stuff. So fundamentals change constantly because fundamentals are just ideas that people who are running the world or companies or whatever it is you're trading. I don't know what you're trading when you're looking at news. I don't know if it's Forex or some stock or whatever, but this looks like Forex, what I'm looking at here. So non-manufacturing PMI figure. So when you're looking at that, you're talking about any type of industry that has nothing to do with the manufacturing industry. Okay, so I don't look at fundamentals because fundamentals to me are just reports of a person's desire for something. That's all it is. And if I were to, I'll put this up for you to try to better explain it. Great question. It's going to take a little minute for me to answer that. I don't know how well versed you are in the market, so I'm trying to simplify it as much as possible. Where is, oh, here we go. And I'm going to share my other screen here. All right. And let me know if you guys can see this screen. Why does it look small? Is it full screen for you guys? Let me see here. Why is it doing that? All right, I don't know why it's it is full screen for you? Okay. For some reason on my end it's not showing full screen. Thanks, bro. Orlando, yours is not full screen, is that what you're saying? Stream setting. No source video, enable one to use the buttons. Here we go. All right. So allow. All right. Can you guys see the Google screen? Let me know if you can. And then let me know if you can see news. It's not full screen, but it's clear. Okay. Thank you. I'm not sure why it's not full screen, but okay. All right. So basically, and as long as you guys can see, then we're good. So you're looking at ISM non-manufacturing that we had this morning. What's today? Today is Wednesday. Yeah. So that was these two here. So this is what I was talking about. You see these numbers over here, actual, forecast, previous, and then you get the graph of it and all that stuff like that. This is why I don't use fundamentals. What they're saying is that previously, and I'm sure you probably already know how to read this, but previously, you had 261,000 orders. And then for this one, it was 55,000. The forecast was that it would be lower and around 208. The forecast here was that it would be lower at 54, but it actually came in much lower. That's what it did here. So I don't use fundamentals to make decisions. I just strictly chart because these fundamentals are just that. They're just basic. It's just basic knowledge. It's not as sharp and as beneficial as technical analysis. Technical analysis forces me to look at a lot of different factors, including fundamental analysis, but I do not make my decisions ever on fundamental analysis. I use fundamental analysis as a gauge for what I believe may be taking place in the world and how I think people feel about that information. Because these stats don't mean anything if the ones investing don't feel it. Every trade decision is a feeling. And you guys have to keep that in mind. People are trading based on how they feel. Everybody's greedy. They're desperate. They want to get rich or they want to control the world. There's always some feeling surrounding money. And typically it's a bad one. So these numbers will change based on how people feel. So the only thing that does not change, if we get out of here now, is these charts. A candle is historical data of how price moved, and it will not change. This is history. It's no different than your bank account. If you go to your bank account, you can see the history of everything you've ever done, and that information will never change. That's actually you. They can take that information of how you spent your money and they can calculate how you're going to spend it in the future because they saw your past actions and the past way in which you spent your money economically. And that's where the word economy comes from, or economics. It's just in the simplest way. If I were to give you a non-financial world definition, economy just simply means how you spend your money. That's all that means. So I'm just looking at the charts because these charts are telling me how the big boys, the institutions, are spending their money. When I see this big candle, this is not my trade that I put in. Oh, wow, this chart is nice. I didn't even see this level. Oh, I don't even have to guess now. I'm going long on this here. Let me go back here. Sorry, guys, I got distracted by that clean level there. That definitely hit an uptrend. This right here. Let me turn this on real quick, and then I'll get back to answering that question. I just want to see something. Oh, yeah. It's near a daily open, too. Look at that. Look at that. Yes. So, daily open. I know people who trade this. They wait for the daily open. They jump in the trade based on the price of the daily open. That's silly. Because, again, that's just fundamentals. Why is that silly? Let's look at some of these open trades. If you had gotten in on this price, look what it did. People love trading the open, but it's silly because it's going to go up 7 pips. From there, it's then going to go down 18 pips from where you got in. Then it's going to go up 35 pips from where you got in. Then it's going to go down 16 pips from where you got in before it finally breaks out and takes off. The average person, I bet you on this call, would not have held on to that trade because you would not have known which direction it was going from the open. How do you know which way it's going unless you back up, look at a bigger picture, and do technical analysis to see which way it's going? You don't know which way it's going from here. So people just basically gamble when they trade. So we're not doing that here on this stream here. Whenever I have the time to get on and chart and trade my personal account, I'll just come on here and share with you guys what I'm looking at, what I'm seeing. If you guys want something more, something deeper, I actually have trading courses where I teach. And so if that's something you're interested in, I can help you with that. We have a group over in Telegram, and you guys are welcome to go there, ask any questions that you want. I'll post it in here before I leave, and that way you can connect with me if you like. But this looks like it's going to keep going up from here. I love that. All right. So that's making me happy because of this trade here. I'm in drawdown by 300 bucks. All right. So looking at technical analysis, though, if I go to 12 hour, that's why I look at this. And I don't strictly depend on fundamental analysis because that stuff's going to change on me. It's not going to stay consistent. Whereas this candle right here, this is an inverted hammer. This lets me know that the sellers came in and they took over. If the fact that it's green even makes me more happy because it tells me buyers were trying to go long at this time. Sellers came in and just smashed. And they smashed so hard that the very next candle that was created was also red. Buyers tried to come in again, red kicked in again. This is just telling me that the sellers took over. If the sellers took over here, that means a lot of orders had to get added. You don't go up like this strong as an institution, bring the market up. The market was going down right here. They decided to add orders here, take the market up, go higher. Let me see if I have my other indicator. Oh, it's not on. I programmed this to, well, I didn't. I have a guy that did it for me, but we put the coordinates in and all of that. And so that's why you're going to see some of these candles change color. I wanted to see if this was a different color. I was hoping it was blue, but it's not. It's I hope it was blue like this, because that means buyers like this. This is buyers and this is sellers. So I was trying to get it somewhere close to a blue and a red. Excuse me, guys. I got allergies this morning. But this candle right here tells me there was a fight between the bears and also the bulls. That's why it's a neutral color. It's just a white color. So the bulls and the bears were fighting here, but we can tell who won because every candle after that was green. So it just pretty much went up. So what I'm getting at is this. There was a lot of tension here, but the buyers were winning and they kept going up and up and up. And watch this. Let me put this over this, and we're going to change the color of this to blue. Let's get rid of some of this noise so you guys don't get distracted. I'll even do that. All right. So keep looking at this blue line here. This was the highest point that the buyers controlled the market. The buyers lost control at $1.10 and 33 pips. Now, if you ask me, why did it do this? I'm not going to look at fundamental analysis to figure out why this happened back on February the 1st at 2 o'clock. What I'm going to do is go back in history to see what was going on historically to cause this thing to fall. So if I go back in history and I follow this blue line here, something here caused it to go down. I don't see anything in here. All I see is more red. You can see it's going down like that. So what I'm going to do is go higher. So let's try, since everything was on a 12, I like the 12 minute. We were on the 12 hour. Let me try the 12 day. I don't see anything in there. Let me cut the 12 day in half to 6. And there we go. This candle here is why it turned. And I find it ironic. Let me hide these. There we go. So this right here reacted off of this candle in history. Why did this thing turn and go down? This candle is just like the other candle we were looking at on the smaller time frame. This candle is on a higher time. This is a 6-day chart. So for 6 days, what this tells me is sellers took over. All these sellers that were here took over. And then when they got here, buyers tried to go long and the sellers said, oh, no, you don't. And look what happened. They pushed them back down. Now let me turn off the indicator so we can see what color that is. And that one's a red one. Now I would have loved to have seen that be green. That would have been better. But it shows me that the sellers were really in control. The buyers tried, but they couldn't even get a green color out of this thing. So the sellers took over. So what does that tell me in history? There is a lot of selling pressure in this area. Notice how all these candles are nice and full and fat until you get maybe here. This one's not that fat. That's because something changed here. And we have an inverted hammer. That's what they call this in the technical world. And these inverted hammers are good friends. Now, don't trade these. Don't look at these and go, oh, it's an inverted hammer. Let me go short. Or it's a hammer. Let me go long. Because right next to it to the left is a hammer and they did not go long. You don't trade like that. But what it does tell me is that there is a fight in here to go long, but also a fight to go short. And you just got to kind of gauge it through technical analysis as to what it's going to do. So when they price action got up here, these buyers that got up here, they ran into all these sell orders that were up here. That's the reason for this short. And now that it got down here after we're shorting, look at this candle. This is a hammer. That tells me there's a lot of buyers in here. So when these sellers got down here, what happened? They had to have a conversation with these buyers. And these buyers said, I don't know where y'all think y'all going, but we're going back up. And that's putting us here. I am analyzing this area on a smaller time frame, which is the 12-hour chart. And I can see here, looking at the 6 day, It's an even fight between bulls and bears here. So this is what's called a base candle. Anytime it looks even, that's a base candle. And base candles are also fairly strong. And I'm going to assume that we're going to get a possible downtrend from this because this is called an immediate retest. If you guys haven't heard of that before, you might hear me say IR. Say that. I'm talking about an immediate retest. What is an immediate retest? It's this candle here. So anytime you have a wick like this, jumping up into an area and coming right back down, kind of like this thing jumped up. This one came down first and then jumped up. This one came down and jumped up. This one went up and then came down. So when we're looking at this here, this is even. So it's just a base candle. But when I see these right here and then they come down right away, that's an immediate retest. Price action came up here, got into this area where these sellers are, and it immediately retested it to see what's going on up here. Institutions love to do that to see how is it going to work out. If they get rejected by other institutions from the past, then that gives them kind of a gauge of what they need to do, and they'll start adding more orders and they'll push the market up. Let's see if any of these candles turn blue to show that this market started going up right where I had my major support line. And I found this on a 30-second chart, and look how good it matches as far as going up from there. So as you can see, I don't care what time frame I'm on, I can find a level whether I'm on the 6-day or 32nd or 1 day. That's why I label them, because I don't know what I was looking at. Like here, we were all just on the 1 minute chart on this. That's why I label those things, because I don't know where I was, because I look at everything. Look at all these time frames I have. I know that's a long answer, Parnham, but I just wanted to make it clear to you why I don't trust completely fundamental analysis. I trust technical analysis. I trust looking at multiple things, multiple time frames, supply, demand, support, resistance, because all of those things actually matter. Supply and demand tells us how our economy is doing. It goes back to that word, how we spend our money. And right here, historically, on March 28th of 2022, we weren't feeling too good about the market. A whole bunch of people put sell orders in here. Do you think all of those sell orders got satisfied by these institutions? No, because there's not enough of us out here to take them all. So they leave some in there, and that's why some of those orders that didn't get triggered, they got triggered here. And how do I know that? If you're saying to yourself, this guy's just saying whatever, he don't know what he's talking about, look at the chart. There was a lot of sell orders here. So what happened? This thing tanked. Let me do this here. It tanked from here to here. 1,400 pips. That was a lot of selling pressure in here. That's a lot of orders to push the market down 12%, 1,400 pips. Then when price action went up and got back up into that area, what happened? It came back down again, but not even close to 1,400, only 400 pips. So you know what that's telling me? These selling orders are getting weak. Because it was strong the first time, and then the second time in this area, when it goes down, it ain't going down as hard. So they're running out of selling pressure, and the buyers are going to start winning this war. Because there's buyers in here. See this hammer here? There's buyers, but there's also sellers. And when this war was going on, the sellers won. And that's the reason for this long move. And so now when it goes up here, I'm expecting it to hit something that's short, but I don't expect it to short too much, but we'll see what happens. Right now, I'm just kind of going maybe to this area back down to my support level, and then we'll probably go up. Parnham, did that help at all? If you're still with us, I hope I gave you guys enough to kind of show you that Persifying is laughing. Yeah, so I hope that helped with that answer as to why I don't use, you're welcome, fundamental analysis. As to why did it crash, nobody's going to know the answer to that. They're going to lie to you on TV. I wouldn't trust the news either. If you were listening to that, don't do that. The news is only going to gear you towards what they want you to do so that they can have you trade the opposite of what they're doing. That's what institutions are doing. If you're asking where am I getting this information from, I used to hang out on the trade floor. So all of my buddies are pretty much traders and stuff and licensed and been there, done that already. Got the t-shirt. So this stuff it's manipulated. It's a game that they're playing with our hearts and with our minds. And so as long as you understand how it works psychologically, and then you trade according to that technical analysis and understanding how the markets work and institutions think, then what's going to happen is you'll be able to have more patience, wait things out, and then you make more money. Patience is what makes me money. It's not because I'm perfect. It's because I'm patient. I find something and I get close to the area where I think they're going to make a short move or a long move. I put a small enough position or a big enough position that I can make some money, but small enough so that it doesn't cause me to lose or blow up my account if it goes against me. I need to be able to close that trade if it goes against me and not cry about the money that I lost. To do that, you need to trade conservatively, and that means whatever your balance is, don't risk more than 2% of that balance. If you got $100, you should not be risking more than $2 of your money. $2 of that 100 should go towards investing. If you got $1,000, then no more than $20 should go towards investing. You got $10,000, no more than $200 should go into investing. And all I mean is on your position size. So you guys will see when you put your trade in, whatever brokerage firm you're trading with, even TradingView does it, they'll show you what the value of your position is. You never want the value of your one trade position to be greater than 2% of your entire balance. If you do, and that trade goes against you, you're going to be crying. You ain't going to be able to get no sleep because too much of your money is going to go away. All right, I just got a lot of alerts, so let's go back down and see what's happening now. Haha. See? Did all that talking. And that was perfect because what is price action doing? It's not doing what we fundamentally thought. It's technical analysis. It's kicking in. So remember I told you guys it looks like they're going to come down here. When they were way over here just trickling up, the average person would have looked at this trade and said, oh, it's going along. Let me jump in and go on along. I'm not doing that. Now, here's my order. Remember I said we're going to get in at 109.15? You guys saw me type that live. Look at what's happening. Why is my indicator all of a sudden saying, hey, there's some demand here. They're starting to go up right at the price that I typed in front of all y'all face. I still think it might wick down here and then go up, but I just really want you guys to see this is not gambling. This is not you're going to lose all your money when you trade or, you see all these horror stories. That's because those people don't know what they're doing. They don't know technical analysis. They know some one strategy that make my money. Everybody's limited to one silly little, way in which they trade. I can scout. I can swing trade. I can long-term trade and invest. I do stocks, futures, Forex, crypto. It doesn't matter because it's all the same. It's all the same market. It's just something different to trade. The only thing I don't get into is options because it's too safe. And by it being that safe, you make money too slow. I don't have time to waste. So I got things to do. So I trade in markets where I trade in the stock market for long-term investing purposes. I try to catch the bottom of markets in whatever it is I'm trading, and then I just hold it for as long as I can. That's how I trade the stock market. I don't do too much shorting or anything like that because the stock market is weird. And let me give you an answer in the stock market very simply. Every stock is basically a company. What happens over time with any good company? It grows. So what is that going to happen to the value of the company? It's going to grow. So you want to stick with buying when you're in the stock market. Shorting is very, very, very dangerous in the stock market. You want to buy. You're talking about businesses. No business is going to thrive if it's constantly failing. They won't even be able to stay on the exchange. And you won't even be able to trade them if they're not doing well in business. So they have to be doing well in order to even qualify to be on the exchange. So you want to buy in the stock market. and you want to buy from the bottom. Let that thing bottom out before you jump in. That's the simple, quick answer I can give you without you knowing how to trade. That's the simple answer I can give you of how to trade the stock market. With foreign exchange, you want to go back and forth because one country may be doing something and they need to do business with another country, and there's goods and services, and like we were just looking at from Parnham, the non-manufacturing financial news and stuff. That's just talking about how our country is communicating with other countries, and we got to get our let's say cotton from New Zealand, gold from Australia. We get rice from different countries, corn, wheat, flour, all kinds of stuff. And so those things are rich in certain countries. And if we want it, we got to do trading with them. And when we trade with them, we got to exchange our currency. So if the US wants to buy something somewhere, or if another country wants to buy something somewhere, the currency has to be exchanged. And all of that exchanging of the currency is causing this thing to go up and down. So it just depends. Is Europe strong right now financially, or is the US strong financially? That's all you got to know. And the chart will tell you. So big picture, 12-hour, we're seeing right now that Europe is in control because the market is up. It's on the upside, and that the dollar is weak. Anytime the euro dollar is going up, then that means Dixie's going down. And so if Dixie is going down, Dixie is considered, and when I say Dixie, I'm going to confuse you guys. I'm so sorry. Let me just stay over here. I realize I'm saying something and half of you probably don't know what I'm talking about. This is gauging the dollar. So this is the dollar's price over here. This has nothing to do with euro. This price is the dollar. And all this is saying over here is that it takes, as of right now, prices at 109.18. So as of right now, if you went to Europe, you're going to need $1.09 and 18 pips worth of US currency to get 1 euro. That's sad, because what it tells me is I'm spending 9% more US dollars when I go to Europe because their economy is more expensive as of right now. Until this thing goes below the dollar, or number one here, until it goes below that, when you travel to Europe today, just be prepared. You're going to spend 10% more money in Europe than you would here in the US. That's what that's meaning in the real world. So if you want to talk about fundamental analysis, that's about the most fundamental I'm going to get. That's just understanding the logical sense of what's happening. More fundamental analysis says, why is the US dollar 9% less value than the euro? I don't care. That's my answer. And none of you on this line care. All you want to do is make money. That's all you're interested in. You do not care about manufacturing and payroll and all of that. So stop reading it and learn how to do technical analysis. That's going to help you a lot. If you learn how to actually read this chart, and I'm really going to help you now. Somebody made this chart, y'all. Don't overanalyze trading. Somebody created this chart. They created these candles, and somebody created these other ones that I use as well. If you go in here. So I know how to read these two bars, and you see I have smooth Heikin-Ashi on. I know how to use point and figure. Which one we got in here? Hollow candles. We got Renko. Yeah. So they have all of these in here, but these are just all different types of charts that a human being created. So I'm going to say something very simple. If a human being created it, they did not create it to be confusing. They created it to make sense.